Why high rental yield is needed for property price growth. If you look at property prices in the UAE, even above 15 million dirhams, 95% of the time, the gross rental yield sits around 5 to 6%. When you buy a property that you want to go up in value, you must factor in the rental price. Here's why they are linked. Two examples. If I'm looking at a 10 million dirham home I'd like to live in for 3 years, whether it be a villa in Abu Dhabi or apartment in DIFC, at 7% rental yield, you're paying 700,000 dirhams annually. It's painful to pay that in rent. Now compare that to if you're buying with a mortgage at 4.5% interest with 30% down, your annual interest rate is around 315,000 dirhams, less than half the rent. If you expect capital growth, buying becomes the financial correct decision. Now reverse it, a 10 million dirham home, but the rent is only 350,000 and your mortgage interest is similar. Why commit 3 million in equity for the same annual cost? You just rent it. When rental yields rise above 5%, buying becomes more attractive and it increases demand. The second reason it matters, global interest rates and bond yields have been falling and are expected to decline further. Investors holding cash were earning 4 to 5% low risk from banks and bonds. As those returns drop, capital moves towards property with stronger yields, especially where prices are expected to rise. More demand flows to higher rental yielding assets, pushing up values. And if that property is undersupplied, like villas and townhouses in Dubai or premium areas in Abu Dhabi, those higher yield segments will see the strongest price growth.